Welcome to Invest and Empower. Before starting, don't forget to like and subscribe to our channel for more future updates. So, let's start. Online stock trading strategies. Online stock trading strategies can vary depending on individual goals, risk tolerance, and investment preferences. Here are a few common strategies that traders often employ. Day trading. Day traders buy and sell stocks within the same trading day, aiming to profit from short-term price fluctuations. They closely monitor market movements and use technical analysis tools and chart patterns to identify potential trading opportunities. Day trading requires active monitoring, quick decision-making, and a good understanding of market dynamics. Time horizon. Day traders aim to take advantage of short-term price fluctuations and capitalize on intraday volatility. Positions are typically closed by the end of the trading day, with no overnight holdings. Day trading requires active participation and monitoring of the market throughout the trading session. Technical analysis. Day traders often rely heavily on technical analysis to make trading decisions. They use charts, indicators, patterns, and other tools to identify potential entry and exit points. Technical analysis helps day traders spot short-term trends, support and resistance levels, and patterns that indicate potential price reversals or breakouts. Volatility and liquidity. Day traders prefer stocks or other instruments that exhibit high volatility and liquidity. Volatility provides opportunities for price movement, while liquidity ensures that traders can easily enter and exit positions without significant price slippage. Stocks with high trading volumes and tight bid-ask spreads are often preferred by day traders. Risk management. Day trading involves inherent risks, including rapid price changes and the potential for losses. Effective risk management is essential. Traders commonly use stop-loss orders to limit potential losses and set profit targets to secure gains. Establishing a risk-reward ratio, ERR, aiming for trades with a higher potential reward than risk, can help maintain a consistent risk management approach. Market monitoring and trading tools. Day traders need to closely monitor market conditions and news that can impact their trades. Real-time data, trading platforms, and tools like Level 2 quotes, market scanners, and news feeds are commonly used to gather information and make informed trading decisions. Access to reliable and fast internet connectivity is crucial for executing trades promptly. Swing trading. Swing traders hold stocks for a few days to several weeks, aiming to capture short to medium-term price movements. They rely on technical analysis to identify trends and patterns that suggest potential price reversals or breakouts. Swing trading requires patience and discipline to wait for favorable entry and exit points. Technical analysis. Technical analysis plays a crucial role in swing trading. Traders use various chart patterns, trend lines, support and resistance levels, and indicators to identify potential entry and exit points. Popular technical indicators for swing trading include moving averages, MACD, RSI, and Fibonacci retracements. The goal is to enter trades at opportune moments when the price is expected to reverse or continue the prevailing trend. Patience and discipline. Swing trading requires patience and discipline. Traders must wait for favorable setups to develop and avoid impulsive trading decisions. It's important to stick to the predetermined trading plan, follow established entry and exit criteria, and not let emotions drive trading decisions. Position sizing and capital management. Proper position sizing and capital management are essential in swing trading. Traders allocate an appropriate portion of their capital to each trade, considering their risk tolerance and the potential risk associated with the trade. Diversification is also important to mitigate risks by spreading capital across multiple trades and instruments. Learning and adaptation. Successful swing trading requires continuous learning and adaptation. Traders should keep abreast of market trends, refine their technical analysis skills, and stay updated on relevant news and events that may impact their trades. Analyzing trade outcomes and adjusting strategies based on lessons learned is crucial for long-term success. Value investing. Value investors look for stocks that they believe are undervalued by the market. They analyze fundamental factors such as company financials, earnings, and growth prospects to identify stocks trading at a discount to their intrinsic value. Value investors take a long-term approach, aiming to hold stocks for extended periods until their value is realized. Growth investing. Growth investors focus on companies with strong growth potential. They look for companies that demonstrate above-average earnings growth rates and expanding market opportunities. Growth investors are willing to pay higher valuations for stocks they believe will deliver substantial long-term returns. Identifying growth companies. Growth investors seek companies that demonstrate the potential for above-average revenue and earnings growth. They look for companies operating in expanding markets, with innovative products or services, strong competitive advantages, and solid management teams. Growth companies are often associated with industries such as technology, healthcare, e-commerce, or renewable energy. Fundamental analysis. Growth investors typically conduct thorough fundamental analysis to assess the financial health and growth potential of companies. They analyze financial statements, earnings growth rates, revenue growth, profit margins, cash flow, and other key metrics to evaluate a company's growth prospects. Factors such as market share, competitive positioning, product pipelines, and customer base expansion are also considered. Long-term perspective. Growth investing is a long-term strategy that requires patience and a focus on the future potential of investments. Growth investors are willing to hold stocks for an extended period, allowing the companies to grow and increase their intrinsic value. They understand that significant growth may take time to materialize and are not overly concerned with short-term market fluctuations. Risk considerations. Growth investing carries inherent risks. Not all growth companies live up to their potential, and the market may not always accurately value their growth prospects. Some growth stocks may experience high volatility and can be susceptible to market downturns. It's important for growth investors to carefully assess and manage the risks associated with their investments. Valuation assessment. While growth investors focus on future growth prospects, they also evaluate the valuation of growth stocks. High-growth companies can sometimes be trading at high price-to-earnings (P/E) ratios or other valuation multiples. Growth investors aim to identify companies with a reasonable balance between growth potential and valuation, seeking opportunities where the market may be underestimating the company's future earnings potential. Monitoring and reassessment. Growth investors continuously monitor their portfolio holdings and regularly reassess the growth prospects of the companies they have invested in. They stay updated on company news, industry trends, and competitive dynamics. If a company's growth trajectory changes or fails to meet expectations, growth investors may make adjustments to their portfolio allocations accordingly. Investor education. Growth investing requires a good understanding of financial markets, industries, and company analysis. Investors should stay informed, conduct research, and continue learning about growth investing strategies, market trends, and evolving business models. Utilizing resources such as company reports, industry publications, and analyst research can aid in the investment decision-making process. Dividend investing. Dividend investors seek stocks that pay regular dividends. They focus on companies with a history of consistent dividend payments and a sustainable dividend yield. Dividend investors often aim to generate income from their stock holdings rather than relying solely on capital appreciation. Momentum trading. Momentum traders look for stocks with strong upward or downward price momentum. They aim to profit from the continuation of existing trends, buying stocks that are rising and selling stocks that are declining. Momentum traders rely on technical analysis indicators and market sentiment to identify stocks with significant price momentum. Contrarian investing. Contrarian investors take a counterintuitive approach by investing in stocks that are out of favor or experiencing temporary setbacks. They believe that market sentiment can create mispriced opportunities, and they aim to buy stocks when they are undervalued and sell when they become overvalued. It's important to note that these strategies come with varying levels of risk, and success depends on factors such as market conditions, research, analysis, and personal experience. It's recommended to thoroughly educate yourself, practice risk management, and consider seeking guidance from financial professionals before engaging in online stock trading. This is it for today's video. What do you think about our video? Feel free to share your thoughts in the comments section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.